All right, party people, it is time to get the action started. A lot to go over today. Derrick Evans here, NMLS 155010, VA home loan expert, helping veterans and active duty service members buy and refinance their homes. All right, so here is what's happening right now. First of all, I want to do some credit tips today because credit is going to be king in this next season. Okay, credit scores and understanding credit scores is going to be king. I have credit videos I'm going to release. I have a bunch of credit tips. A lot of things are specific to circumstance, but some things are general and will work for everybody. I'm going to get us shared here as well, as we're going to kick this over to both YouTube and on my personal profile as well, if I can get it to work. So the credit tips, and we're going to talk real estate. We're going to look at the stock market. We're going to look at mortgage rates, which is a key component, not just to obviously my business, what I do in real estate, but the overall economy. It's huge. So first and foremost, this is what gets most people in trouble, and this is across the board. We're going to talk about credit for a second first. Assumptions. People making assumptions. A recent one. This is keeping a woman and her sons who live together from buying a house because her ex was supposed to get her off the mortgage. Well, he didn't. And now there's lates in the mortgage, and there's no way to undo that. Maybe we can get her taken off, he refinances, but those lates where she's associated with that loan, they're going to stay there. And so her credit scores are suffering because of that and not putting them in a position to be able to qualify, which sucks. Sucks royally. So there's situations like that. There's no such thing as a small assumption, okay? Especially in real estate and lending. There's no such thing as a small assumption. I'll give you an example on an assumption I made incorrectly this week. Fortunately, we funded the loan today on time. Today was the COE, and the loan funded, and we'll record today. So no harm, no foul, right? But I still learned something because I made an assumption on a transaction that was taking place in another state that people had their shit together, knew what they were doing, and were going to take care of business. That is a huge assumption. There are a lot of things that can go wrong. So things that I have to do, things that we have to do, those of us who are in real estate and lending, we have to keep it extremely high and tight right now. No assumptions, everything gets covered, everything up front, clear communication at all times. Has to be that way. There's a lot of moving parts out there, so we cannot leave this ambiguity in place. Now, when it comes to your credit, it's the same situation. There are a lot of things going on right now. Forbearance, people that are doing forbearance, which isn't really a benefit. I don't recommend it. And there's certain situations where you won't be able to refinance if you have a Fannie Mae loan. And even though VA, you're still eligible, most of the banks are kind of going, wait a minute, we're not sure if we want to refinance a VA loan that's been in forbearance because we don't know if it's going to work on the secondary market. We don't know if we're going to be able to sell it. There's unknowns out there. So we need to be really high and tight with credit right now, which means here's the biggest thing most people can do. You have credit cards. Make your payments before the statement ending date. When the statement ending date comes and you get your bill and it says you owe $1,000 this month on your card and you go and pay it off, well, as soon as they send you the bill, they're sending the credit bureaus the same information. So it's showing up on your credit report, if you pulled your credit report, that you owe that $1,000. Even though you turn around and paid it off right away, they're still showing that because that's what they're sending to the credit bureau. So what you see on your statement is what goes to the credit bureau. So pay that thing off before the statement ending date. So your statement says 0. That's what it'll say with the credit bureau as well. If you don't have an auto loan, get one, a small one. Go to a credit union, get a $500 loan. Doesn't matter how much. Auto loans are huge for credit, but it needs to be there for 6 months before you really start to see the effects. So make sure if you pay off your auto loan, people report this to me all the time. I paid off my car loan. My score should be so much higher now. Nope, they're going to be lower. Within 6 months, they'll go down. Guaranteed. So we need to keep things high and tight. I've got more credit tips coming. It is important to have credit cards. Paying them off is great. Credit card balances are big credit score killers. Late payments, do whatever you can to avoid a late payment. Pay 29 days late if you have to, but don't get a late payment. Credit score is going to be so huge, and the difference, the dichotomy in the way that people are going to be treated. If you have a 620 versus a 720, that is also growing. I mean, it used to be like, oh, well, that's not too far. A 620 or 660, same. That's not too much difference. Maybe a slight adjustment. Those thresholds are moving, and if your credit scores are lower, you're going to see that you're going to get disqualified. You're going to pay extremely high rates. the credit risk, the risk-based pricing that's taking place for lower credit scores is going to accelerate. I can tell you right now for sure, I've seen this before, this is what's going to happen. So we need to keep credit high and tight. High and tight, all right? Same thing with real estate. We got to do this. Remember, there's no such thing as a small assumption. Disappointment, is always built on the blocks of assumption, right? The building blocks for disappointment is assumptions, or one assumption. And there's no such thing as a small one. Every one is not good. So when it comes to your credit, when it comes to your real estate, when it comes to your refinance, make no assumptions. Oh, I talked to the guy. He was a nice guy. Yeah, he said 2.75. What were the fees? I don't know. I didn't ask. I'm assuming not any. He didn't say anything. Bullshit. There's fees. Seeing a lot of veterans get screwed over. I've been looking over emails that I've seen people get. I'm seeing faulty advertisements. I'm seeing all sorts of crazy stuff in the VA loan space. The hell's going on? People are getting lied to. Come on. This is what's happening. So high and tight. No assumptions. Ask every question. I think I do a great job of educating all my buyers and clients who are refinancing about everything that's going on, every element of the process, all the numbers involved. But maybe I'm missing something. I'm going to do everything I can to make sure that I'm not. I'm going to do everything I can to make sure that I'm communicating every single thing. We've got to do that. We've got to know, because people are making assumptions out there. People are still trying to screw people over out there. People are taking advantage of veterans left and right out there. It's driving me crazy. I don't know how to get to all. I can't get to everyone. I don't know how to even get a message to everyone, but I'm doing my best. So assumptions are the dream killer. They are what will drive us to disappointment when it comes to credit or real estate or anything else for that matter. Let's take a look at the market here today. This is a market that's clearly being manipulated, as I've mentioned many times. I warned you about this yesterday. I went live on YouTube yesterday. I was experimenting with Zoom. Zoom sucks compared to Minicam. That's my final opinion. But this looked like a pretty normal day, right? The Dow, it gaps down a little bit, but not too much. And then it goes in, it makes a higher high. So the Dow likes to do this. It likes to make a higher high and then a lower low. So I knew we were going to break this level right here. But notice what happened as soon as we broke that level, boom. This is an over 500 point move right here. Then this is where the manipulation comes in. Look at that. That's where it stayed the rest of the day. Come on. And then it just stayed there. So, oh no, I think this is a 500 point down day. Oh, okay. Well, the Fed chairman came out and said whatever it was that he said. His warning was, I can't remember what it was that he said. He said that more needs to be done to support the economy. Sorry, I need to switch screens. He said more needs to be done to support the economy. While the economic response has been both timely and appropriately large, it may not be the final chapter, given that the path ahead is both highly uncertain and subject to significant downside risks. And what people are missing in this statement, we should be rejoicing. Hey, look, they're on it. Like the Feds are on it. They are ahead of the game. This is the reason why we had problems in the past is because everything was so reactionary. They're way ahead. Congress is looking for another $3 trillion. And why not? You're already at tens of trillions. What's another $3 trillion? Listen, whatever it takes, right? That's the attitude. That's the mantra that's going on right now. We're seeing there's discussions of negative interest rates going on. We've seen that stuff happening, and there's a lot of discussions around that. I'll get to that one of these days. We're not quite there yet, but that's basically what we're like. So I told you this was going to happen yesterday. Sorry about posting on YouTube, and I know not as many people on Facebook saw it, but we knew this was going to take place. The sentiment has changed. It looks like big money is rolling over in stocks, so this should be really good for mortgage bonds. Unfortunately, the Fed, who is continuing to buy mortgage bonds every single day, billions and billions of dollars worth, they're not able to really put much of a dent in what's taking place here. You see, even though the Fed bought like $6 billion worth of mortgage bonds this day, look at the capitulation. Lots of selling going on here. Now, until we get to this level, which we had never quite got to, and it ended up becoming the support level here on the moving average. I think that's the 50-day moving average. That is kind of the old low of this channel. So this channel is about this big if we really look at it. So we're on the lower side of that channel, which means if the Fed is able to keep things in check, which I believe that they will be able to do, if they are able to do that, then what we'll see is that there's some opportunity here for mortgage rates to improve, because they've kind of gotten worse over the last couple weeks. As you see here, the pricing has just sort of steadily gotten worse. Fortunately, and I locked at just the right time. I locked actually several days before Barry locked, put out the lock. This is Barry Habib's graph here. I locked on this day. He issued their alert to lock here, about 50 or 60 basis points worse. So knowing when the lock is huge. But what we're seeing here and what we're continuing to see is we have really good interest rates. You're getting in the high twos in some circumstances. You can buy the buy downs to get into the high twos aren't too bad either for low balance, even low credit borrowers. You have high balance rates that are the most out of whack. That's the place where it's the most wonky right now. Anything above 510, 400 is still a little wonky. Same thing on the conventional side. But what we're still seeing here in San Diego is a massive lack of inventory. A massive lack of inventory. To the extent where I've got, I don't know how many people, lots, who are out there pre-approved that are trying to buy homes. I had 6 offers go out over the weekend. Nobody got in contract. So if there's some inventory wave coming for all the negative naysayers and all the people who have been telling me the stock market's going to crash, and everybody on YouTube who says the crash is coming, you know who you are. You think the crash is coming. Where's your crash? Where's your inventory? The only thing that's going to crash the real estate market is an abundance of inventory, right? If we all of a sudden have more sellers than buyers, we see prices go down. We still have so many more buyers than sellers. And as the economy starts to open back up, right now it's still TBD in real estate. If someone who's watching this is in real estate and has a jump on when the California Association of Realtors is going to allow open houses and things like that to take place again, please let me know. I don't think you can do it right now. I still believe you're not supposed to have open houses and that you are supposed to do social distancing and all those things. If that's changed, please let me know. As far as I know, that is still the case. When that changes, when that shift comes and we start to see more activity on the open house side and sort of the marketing side, I believe there will be some sellers who come to market. We need those sellers desperately right now. We have buyers who are trying to buy homes. There's a lot of requests for repairs going on. There's a lot of, because if a buyer is buying a home and they're in a multiple counter and they're putting in a big offer, they're expecting that home to be perfect. So if it's not, they're going to do requests for repairs. They're going to ask for seller concessions. They're going to ask for something. And we're seeing a lot of that taking place right now. So what I see, and I'm in the pretty much the sub 650, sub 700 market, mostly veterans and VA loans for active duty service members. It's on fire. It's on fire, and people are having a hard time finding a home because there's so much competition and so little inventory. So the market is super strong. We're going to have Jay Lee come on as soon as the stats are out for April. We're going to look at a deep dive into, hey, what does the market look like? What do the numbers say about what happened in April? I believe we're going to see year over year, April this year from April last year, a nice size appreciation percentage, even amidst all this stuff. And we'll see what Jay says about the trail and things like that as far as the data is concerned and when we can expect to really see the coronavirus effect flush out. But really what's happening is there's a lot of buyers and a lot of sellers who have both just sort of stepped to the side, and they've kind of just all stepped to the side, but there's still way more buyers active than there are sellers. So even though the number of transactions is down, which hurts certain businesses, it does. It hurts title companies. It hurts escrow companies. It hurts the unit-driven, resale-driven industries. In mortgage, we have a lot of refinances right now, so that's keeping units insanely high, record-breaking units for most mortgage companies right now, which is also causing issues with turnaround times and things like that. My organization has done a tremendous job of keeping turnaround times really good on purchase loans. And sometimes refinances are just going to take longer. They just are because of the nature of the immediacy of purchase loans. Those are all things that are indicative of a real estate market that is thriving. Not one that's barely hanging on by a thread. Not one that is in trouble or on shaky ground. Those are all indicators that things are super, super strong. So we need some sort of cataclysmic, something drastic would have to change here to turn the outlook on real estate around. As I said weeks and weeks ago, months ago, I believe if we do enter recession, which remember we had the inverted bond curve, that happened last year. The yield curve for bonds inverted last year. When Barry Habib came on my radio show in September, he was talking about this, and it had happened at that point. So the talk of recession has been coming for a while. The technical indicators have been lined up for a while. I've been saying from the very beginning, real estate was going to be the best investment if there's a recession. It's definitely been the best investment the last 10 years when the economy's been thriving, but it's also going to be the best investment during a recession, and that so far looks to be the case. Of course, I will yield to the numbers. We will look at all that. I will let you know if I'm wrong. I have been wrong before. I do expect to be correct on this one. So let's take a look here just real fast. We'll finish this up. You can watch these things on CNBC. So we saw Twitter, and I don't think, do I have this on here? Twitter work from home. So this just came out yesterday, and this is a massive issue for commercial real estate. And the reason I bring this up is because I personally have investments in commercial real estate, which are, in my opinion, the weakest parts of my investments at this moment. So now they're changing it to let some, but as of yesterday, this message was Twitter will let employees, oh, come on, CNN, this is why no one goes to your website, ding dongs. Sorry. So Twitter basically said yesterday, hey, we're going to allow our employees who've been working from home to work from home permanently if they want to. And so one of the big things that is economic fallout, which does touch real estate, although it doesn't touch residential real estate, commercial real estate, big trouble. Commercial real estate is in big trouble. And a good friend of mine just spoke with a huge commercial real estate broker this week, and he said that she was telling him it's been crickets for months. And we kind of knew that a lot of these things were going to happen, right? We knew that eventually telecommuting would become more normal. The technology's there. I'm running a full office setup in here, a full studio and office structure. I've got a full-size ring light here. I've got a high-definition camera. I've got a studio microphone that I'm using, a laptop, an iMac, and another monitor, all here. I can execute everything right here. What's the point of adding 2 hours to my day to drive or an hour a day to drive? But we're going to start realizing this. The convenience factor is huge. I'm able to get so much more done from here without having to have any commute, without having to get in the car, without having to drive anywhere where you can't really do anything, to be able to also spend time. I have a young son. There's some really big advantages to working from home if you're in a situation where you can pull that off. A lot of these tech companies are in that situation. A lot of the people who work for them are coders or people who are working at computers all day. They don't need to come to the office for that. If they are able to self-manage, which is question mark, not everyone is, or not, some people don't have the setup at home to be able to do it. But I know right now, for example, in the mortgage industry, there's a lot of underwriters who work from home. A lot of times the banks will require that they have their own dedicated office space, but they're working from home. So we're going to see more and more of that, which means, I'm just going to tell you right now, if you have commercial real estate investments, it's probably a good idea to get out of it, if you can. I'm kind of stuck in what I'm in. And if you get into those fractional ownership situations, you can get stuck. This is an unfortunate thing. I do think it will still pay off, but I'm going to have to get out as soon as I possibly can. I would suggest you probably do the same thing. I don't think any of those commercial real estate investment trusts, any of that stuff is a smart move right here. I think that the floodgates have opened, and I think office space is just going to get murdered. So the question that I was asked, and the reason I brought it up, does that somehow spill into residential real estate? Nope. Not at all. If it does, it's a huge positive, okay? And this is the ultimate cherry on the top of this video. Think about it. If you now are going to work from home, that's going to become a part of what you do. That's going to become your norm. Maybe your company's going to require you need to have a dedicated room. Well, shoot, we're in a 2-bedroom condo, honey. We need to get a house. Or, hey, I'm in this house and, I've got this office set up, but this room really isn't as big as it looks. I mean, that's a mirror back there. This is a normal size, like 12 by 12 room. It looks bigger because of the way I've structured it, but the reality is it's a pretty small room. If I'm going to work from home, gosh, I think we should get a place where, I can have a nice big office set up and, if anything, the concept of working from home will make more room needed at home. It will make the employees' objectives for what they need in a home different because they'll need an extra bedroom. They'll need an office space. They'll need a den. They'll need a loft. They'll need that extra space. And when people need extra space, whether they're having a baby, whether mom and dad is moving in, whether they're God bless some people who I've talked to recently who are taking in a child that needs help. If they're in one of those situations where you need more room, what do people do? They buy a new house. If they have one currently, they'll sell it and they'll buy another one. And that's great. That's amazing. If we could get sellers and buyers right now, it would be awesome. That's great. We need more numbers is what we need. Prices are in great shape. We don't have the volume that I think that is warranted by the demand that's out there right now. So if anything, the commercial real estate collapse, because it is caused by telecommuting and not caused by businesses going out of business, could be great for residential real estate. All right, I'm going to get off my soapbox. I know that's a lot for today. I had a lot to say. It was a great day. Shout out to Saul Escobar, who made a miracle happen today. You are the man, Saul. If you know a veteran or active duty service member who's looking to buy or refinance their home, have them give me a shout. I will give them the world-class service that they deserve. If you think this video has been helpful for you, please feel free to share it on this page or with your friends. I appreciate it. I'll see you again soon.